Mute. Did that do it? I think I might have just done it. Can you guys hear me? Anybody, can you hear me? Testing, testing. No comments. Oh, good. Yes. All right. Well, we're back. I don't know what I did there, but thanks for your. So here's the thing. I decided I need to test out this software that I bought called StreamYard. StreamYard rather. StreamYard is streaming live. You can see that's what we're doing here. So it's live right now. It tells me on Twitter and on YouTube. So thank you for tuning in. I didn't really have much of an agenda here, but I would like to talk about the market. And if you have questions, I'm going to take questions. So type them in there. And as I see questions come in, I will respond to those. Meanwhile, let's talk about the semiconductors. They're lagging recently, but still having a super strong year. Let's take a look at this. We'll just change the color of that anchor to green. And, so here's the thing. We're below the 20-day moving average. That's that red line. We're below the blue 50-day moving average. And this is where we were 50 days ago right here. So that means as we get rid of this data the next 3 or 4 days, we could get stuck under the 50-day moving average. And, it's been a great year for the semiconductors, but they're resting now, and that's okay for them to rest. They've had a big year. We can put an anchor off of this peak and say, look at that. We're stuck below the anchor from this recent high. So over on the right, I have my 30-minute time frame. The anchor I just put on there is from that recent high. That's this one right here on the daily time frame. So what you see is this week so far, we found supply at the anchor from the high, at the anchor from the election, that's that orange, at the anchor from the blue, which is the beginning of the month. And now we're back below this black declining 5-day moving average. So there's no reason to be looking to buy semiconductor stocks right now, especially when we see NVIDIA is underperforming at the moment. Someone asked me today, has NVIDIA made a top? It's made a 4-day top so far. Will that be a top that lasts like this one for several months before we see another new high, or will we quickly turn around? Well, I'm not going to bet on a turnaround because we're touching a 20-day moving average or maybe even this 50-day moving average. And I'm not going to make a bet based on an anchor touch from this low or from this low, which we might end up doing. We might end up just doing something like this. And that would be okay for me because I don't currently have a position in NVIDIA. As an investor, you've got to look at it and say, what's your time frame? Where's your stop? What are you looking for? But while we're below the declining 5-day moving average in this ugly green anchor right here, which is the anchor from the earnings report, there's no reason to be looking to be a buyer because the sellers are in control of the intermediate term. That's all you need to know for now about NVIDIA. What we can draw scenarios that maybe it undercuts this low and then starts to turn around in a few weeks. It's ready to go again. But why not focus on what's working instead? The Russell 2000 has been where the strength is recently, but what did we have with the Russell 2000? We saw a new high for the year right here yesterday. What happened on that high? People who buy breakouts over the last few years have been complaining, hey, breakouts don't seem to work. Well, you have to ask yourself, where does that breakout come from? It just rallied from 226 up to 243 to break out. Where has it come from? Where did it have the potential to go? This is where it had the potential to go. It broke out, and the people who bought it chased the breakout. It had just rallied this big amount right here, and just look at previous big rallies like this and what the subsequent action was. So you have to be aware of the personality of the vehicle you're trading as well. This big rally, this one, this one, and this one, they all have shit the bed. It doesn't mean it's going to happen here, but from an intermediate term perspective, if you just look at the pattern of higher highs and higher lows, we broke that pattern today. So it's not the end of the world. It's just saying we're correcting a little bit right now. So that's where we are in the Russell 2000. Let's see if I can back this up and look for some of the questions. So what are the strongest themes and sectors you're watching is what Richard Moglen's asking. And Richard, I am not really into the themes so much as I'm into, just I'm a bottoms up stock picker, in other words. What I did notice though is a lot of the names of of the last big bull run are starting to move. The stocks like AMBA, which after the market close had earnings. So all these names that were previous big winners like AMBA, like Bill, or what do you call it? Lemonade. These stocks that had, if they didn't scare you, they had those big run ups. And if they didn't scare you out on the way down, they wore you out over here. I'm going to put this camera out of my sight because I don't need it. So these are entering these giant stage two uptrends. And these are the stocks that I think are really, I think Mindy was one of them that, kind of different, I guess, went over here. But these are the types of stocks that are going to be that, Affirm, which I'm currently long. Upstart, I don't have a position in it right now. That's kind of a mistake, I think. But these are the types of names that I'm focused on. Is Bros. Bros, I'm long this one. I'm long a little bit of MGNI. MGNI has this beautiful long-term base as well. And let me tell people who aren't familiar with some of the strategies that I use. One, I use multiple time frame analysis, and I take thirds off. So in this stock, I had 1/3 left in this stock coming into today. My stop was at $16.31 per share. So let's look at how that played out. On the open today, the stock opened, and this is a 5-minute chart. The stock opened below and clicked below that 1631. So technically, I should have been stopped out. But what kept me in this stock today is something that's kept me in a lot of stocks. One, I never, ever, ever set a stop before the market opens, because you have these opening drives like this. There are often just manipulations trying to run stops. So I always wait 5 minutes. And then at the end of the 5 minutes, so my stop was 1631. I should have been stopped out, but I didn't set it. I waited 5 minutes. And then after that first 5-minute bar was closed, my stop went under there. And I left it there for the day. I have 1/3 left. I'd like to reestablish my position in here, but that same exit strategy kept me in another stock that I've spoken about recently, HAYW. Same story. This stop was to have been hit on a 2/3 position, but instead I waited and set my stop below the low of the day. Let's look at this Hayward on a weekly chart. So these are the types of stocks, and whatever the theme is, Richard, I don't even know. There's a lot of cybersecurity that's working, I'm told. I look at it on a stock by stock basis. That way I don't get tied to, hey, well, these semiconductors are working, so I have to be, even when the semiconductors were weak, relatively a couple of weeks ago, NVIDIA was hitting a new all-time high. So do I care what the average semiconductor is if I'm trading NVIDIA? No, not really. So I'm more of a bottoms up, but a great question. Trading 104 times PE, I have no idea what that's in reference to, and nor do I really care. Brian, I found the 5-day moving average on futures give me a better sense of direction on the X. Do you prefer just the index 5? I have the 5-day moving average on every single one of my charts. You will not see a chart without the 5. It's usually orange, but because the anchor from the election is orange, I changed it to black. So that's my 5-day moving average. You will see it on every single stock that I look at. Genie is one involved in, because it just made a higher high above the flat 5-day moving average, and it has a nice longer term chart. And here's the weekly chart. So I love these types of stocks. That's the theme. The theme I'm looking for is longer term bases that are starting to break out. Similar to, look at how, the Qs had a longer term base and broke out over here. You didn't have to buy at the low to make money in the Nasdaq. If you bought here, great. If you bought right here as the buyers were regaining control after this bullish flag, or right in here, or if you bought right in here, these are all secondary entry points into a primary trend. Thanks for hammering on the significance of the 5-day. Absolutely love it. Great. I love hearing that. It's my favorite tool that I use on a regular basis. Like I said, it's on every single one of my charts right here. So that's the way I look at it. from an intermediate terms perspective. Tesla, very curious about its current state. I got stopped out of Tesla yesterday. Longer term, I'm still bullish the stock. We're above a rising 20, 31, and 42-week moving average. And some of you might be saying, well, why is that a 31-week moving average and a 42-week moving average? Well, if you account for holidays, then a 30-week moving average is much closer to a 150-day moving average than a 30-week moving average. And 42 weeks is much closer to the 200-day moving average than a 40-week. The 42-week moving average is actually about 201 days. So it's much more accurate than looking at the 40-week moving average, which is less than that. Anyways, Tesla, very curious. Okay, so yeah, longer term, we've got this bullish inverted head and shoulders pattern. If you take a look at the height of that, we can say this is the neckline of that head and shoulders pattern. So this is the height right here. We had that to the breakout point. It still implies a move up towards 400. And I think Tesla is likely heading towards 400. The problem is we've gotten a little bit extended here recently. I just got involved on, was it Thursday or Friday over here? I sold a third there and got stopped out of the balance over here yesterday. I don't want to let it turn into a loser. The stock is below the 5-day moving average right now, so I'm not going to be looking to buy this. I'm thinking maybe it pulls down into the anchor from the election, or maybe even from the month to date like it did right here. And then if it starts, I'm not going to buy there, but if it starts to rebuild and the 5-day moving average starts to do something like this, let's draw this out a little bit. And let me just move this over. So what I'd be looking for is, this would be the 5-day moving average, let's say, if we come down to this anchor. And maybe we even undercut it a little bit and we do, some action like this for the next week, week and a half. That 5-day moving average will bear down on it like this. I will be looking to be a buyer right here as it makes that higher high above that flat to rising 5-day moving average. And then if I'm a buyer here, I might put half of my stop here and maybe half of my stop under there. Or ideally, it would make another higher low right here. So maybe I would put half of my stop here, a quarter of my stop here, and another quarter there, thinking that, okay, if it starts to run, I'm going to sell a third. And then ideally, it starts to do this. And as it starts to break higher here, I will raise my stop to that level and keep raising my stop up under these higher lows until the market tells me it's time to take my profit in it. So you're welcome for hammering down on the 5-day moving average. What's my favorite small cap semi? I don't have favorite stocks. I just don't have favorite stocks. Do AVGO. CNAC really? Is that a polite way of asking me for something? If you rephrase that, maybe I would think about it. Can I talk about a bit about Bitcoin? Sure. Let me do this, because here's a problem that I've had with my other web, and the part of the reason I'm using this software tonight is I'm trying to experiment with how do I share screen, present, share screen. Let's see if I can change the window. So share. Hopefully that didn't mess things up, and you should now be able to see the Bitcoin chart on the screen. And this is trading view. And what I have here, this horizontal line, is just to represent what these numbers are down here. So I have a longer term position. I've been updating this, for the last several weeks, that I have a 20% position left in Bitcoin. Do I wish I had more? Sure, but I don't. So I'm not obsessed about that. I have a 20% position that I'm holding on to, and I own it from 62,000. And last night I took I added 5% right in here as it touched the VWAP from this prior high. Today, or last night, in the middle of the night, I bought some right here, another 5%. So I have a 30% position. I'm going to add 20% down in here. This is the orange is the anchor from the election. Black is the anchor from the November low. So if we were to look at this on a daily time frame, that's kind of how it comes together. It looks much better on that hourly chart. Well, here's the hourly chart. So we're still in a short-term downtrend. I think that, my fear is that with now a 30%, that I'm still underrepresented in the strongest asset out there, but so I want to participate on further upside, but I'm not going to 100% position. Even if we get down to here, I'm only going to get to a half a position. What would get me to a full position might be something like if we were to, that's not what I meant to do. See, I'm not as good at drawing on trading view as I am with TC2000 there. That's what I wanted to do. So, maybe we come down here and Bitcoin does bounce and it breaks this downtrend and starts to rally up, and then ding ding ding, we get that 100,000. Well, I'll have a half of a risk unit, but based on my pullback purchases, I might add that other 50% right here. But on that 50%, so bringing me to 100%, I would have a stop on 50% right under here. But if it starts to rally like this, might most likely look to sell some on strength again. Where? Well, maybe the anchor from this peak. So this anchor might come down like this, And maybe I would look to sell partial if I have 100% position. And now my average, of my new purchases is 89, let's say 89.5. I might sell some at 91, 92. Because at that point I'll have a decent sized position. And then it comes down to risk management. So that's the way I'm looking at Bitcoin. I'm going to switch back again to the other screen. I just want to also get comfortable with switching back and forth between different screens here to make sure that I'm comfortable with this software. So let me share that again. And we can look at the Bitcoin proxy, which is IBIT, and look at the same level there. So the anchor from the election for the Bitcoin is right here at just about 51 even. That is the level there. So if we look at it, see it's 51 even basically. And the month to date would be found at about 49.70. So that is a much wider range because we don't have 24-hour trading in the IBIT. I personally don't trade the IBIT unless maybe I'm going to do an intraday scalp, which isn't typical of me because I'm more interested in stocks. I'm a stock trader. So anyways, that's the way I look at those. Another interesting thing here is that if you look at Bitcoin, let's just rather than switch back to trading view, we'll take a look at this and say, what about this recent move? We can take a Fibonacci off of this low to this high, or we can, 61% of that, or more important, the low from the beginning of the month and a 61.8% retracement would bring us down into this level. This level is 87. So kind of reemphasizes that 87, 88 level. We've got a rising 20-day moving average in there. The 20-day moving average has been pretty good for Bitcoin ever since we saw that right here, that was the golden cross, which happened to be a very good signal for once, because usually it's a very bad signal, the golden cross, meaning the 50-day moving average crossing up through the 50-day moving average crossing up through the 200-day moving average is what's known as the golden cross. I always say moving average crossovers mean indecision. We've got mixed messages from different time frames. We can talk about that another day. Let's see if I got some more other questions here. I'm sure there are. Why did you set your setup moving average like this? They're normally higher than this. I have no idea what you're talking about. So I'm sorry I can't help you with that. Thoughts on Treasury position right now with Scott Bessett confirmation. I don't know anything about Scott Bessett. All I do is I'll look at the TLT, and I still see that, maybe we're going to run a little bit in here. Perhaps we run up to the 50-day moving average, which is also the location of the 200-day moving average. And guess what? If we continue at this pace, that 50-day moving average, we're getting rid of this data in the 50-day moving average calculation and averaging it with this data. Well, that 50-day moving average has a pretty steep slope to it. And in the next couple of days, you're going to get a so-called death cross in the TLT, meaning the 50-day moving average drops down through. Supposedly a bearish sign. I don't think it is here, but I have to look at it and say, where has it come from? It's just come from 89 to 90 3 basically. Where does it have the potential to go before it's likely to encounter a source of supply which might become resistance? To me, I'm looking straight at this level for 3 different reasons. 1, we have the declining 50-day moving average. That's that blue line. 2, in here, this thin black line, that's the 200-day moving average. That often acts as resistance. Then we've got this thick blue year-to-date anchored VWAP. So when I look at it and say, where does it come from? 89 to 93, basically, well, 89 and a half to 92 and a half, 3 points. It's rallied 3 points. That's 3%, basically, right? Where does it have the potential to go before it's likely to encounter a source of supply, which might become resistance? That's right here, maybe a point and a half away. Then I say, is the potential reward worth the perceived risk? What is the perceived risk? Well, if you look at it and say, maybe a stop below today's low, maybe that trade's worth it to you. I don't trade the TLT or any of these bond products because they gap every single day. And how are you supposed to hold a swing trade when you have these gaps where you can't control the risk? So to me, I'm not interested in the bonds. That's the most that I've spoken about them in quite a long time. Just as I don't trade FXI. And as I pointed out on FXI today, I've been saying this for years. You can't trust China. They lie. Their accounting standards suck. And their so-called stimulus, we saw that big stimulus here. Then they tried to milk that headline again here. But the average price on the FXI since this rally began is up here at 32. The average long participant is now down 2.5 points. The average short seller is now up 2.5 points, or about 10%. So China, I would just stay away from. And not only because of that, but as I pointed out with the TLT, how do you control risk in something that gaps every single day? I don't know how to control risk in there. To me, people talk about risk management, then they go trade stuff like this. I don't understand. You can't be serious about managing risk if you're willing to give up this much edge based on just different gaps for different reasons, because it's an overseas trading product. Anyways, let's see. Yes, I generally saw moving average like 20, 100, and 200. I don't know what you mean like that. So on my charts, on my daily chart, I have a 20-day, a 50-day, and a 200-day. Maybe that's what you're talking about. On my shorter term timeframes, I just have the 5-day moving average. On a weekly time frame, I have the 20, 31, and 42, which are approximately equal to the 100, 150, and 200-day moving average. How do I find stocks? Do I use a screening tool? I do all my screening manually. So everything that I look at, from time to time, I'll look at, stocks that are strong movers and that sort of thing. But most of the time, what I look at is just a long list of stocks that, to me, I don't get bored looking at stocks. So I'll look at a screen that looks something like this, and I will say, here's my list for the week. And I'll look at the ones that I have flagged from the beginning of the week, and I'll just go down like this. And I'll look at the daily, the 65, the 30, and the 10-minute chart, and I'll look at them. And, this is, people will think, well, what's that magic thing you have there? This is a 3-day moving average I was messing around with. That's a 5-day. This is the 10 and the 5 and the 10-day moving average up in here. I've got the 5-day simple moving average and the exponential. And I've had that exponential in there for a little while because some people try to be smart and put the exponential 5-day moving average in there. And I have seen on hundreds of thousands of charts at this point that the 5-day simple moving average is superior to the 5-day exponential. I haven't done a back test. I've done a live look. So, this is how I find charts. I look at them like this, probably at about this pace. ACCO, it's breaking. It's broken some resistance here. Its average daily volume is 742,000 shares. It pulled back. It made a higher high above the 5-day moving average. I missed it that day, but I'll just scroll through stocks until I find something of interest. I jot it down, and then I put it on my main list, and I set a lot of alerts. So here's my shit list stock. So these are little shit stocks that I saw on Twitter that some people were mentioning this is intraday pullback. So all of my scanning is done, manually. I thought you don't buy dips, GZ says, and I think he's probably referring to Bitcoin. And I've said over and over and over again, Bitcoin crypto is a different beast. It is the only market I buy dips in. In equities, I don't buy dips. I buy strength after the dip. But even in Bitcoin, I'm not looking to establish a full size position. But I have made I've made a lot of money in Bitcoin by having bids in overnight at ridiculous prices and getting filled on them when someone panics overseas and I get filled there. Um, Anyways, like I said, I didn't have an agenda here tonight. I was truthfully just looking to check out this software, which is called StreamYard, which allows me to simultaneously cast this on Twitter and on YouTube. And it appears as though it's working in both of them. I don't know if I believe this number, but it says 4,400 people are here, 4,300 on Twitter, and 156 on YouTube. So if that number is true, I'm thankful for everyone who showed up here tonight. I guess before I leave, I ought to, tell you a couple of stocks I'm looking at. I mentioned Tyson on Twitter today, and Tyson Foods. I mean, it's a food company, it's a boring food company, but same thing. Here's a longer term chart. This is the peak in 2022. You can see we're back above the anchor from that. And again, it's a food play. How excited about it can you get? We do have a rising 20-day moving average above a rising 50-day moving average. On the shorter term time frame, though, we're still kind of consolidating in here. This is the week to date volume weighted average price. This one is from that gap. So it's one I've got an eye on. I'd love to see it maybe do something like this and tighten up in the next day or two and then get going. And I actually should probably use the market surge chart that I showed earlier, but this, that looks like a nice long-term bottom. This could be something that if you're looking to put some money away in a so-called blue chip defensive name, then this might be it. Who knows? Maybe if the semiconductors continue to roll over, they're going to, maybe I'm not calling for this, but I'm always open-minded to, hey, maybe this is what's going to happen for the semis. They're going to come dance on the year-to-date anchor, and then next year something happens and they start to decline. The 200-day moving average flattens out and declines. Why not? We haven't had a big look at the size of this rally. Why can't we have a bear market in the semis? Again, I'm not calling for it, but right now I'm cautious on these things. So maybe it makes sense to have a defensive name like Tyson in your back pocket. I mentioned Cake as well, Cheesecake Factory. That's getting going after hours. I usually don't pay attention after hours because by the time the market opens the next morning, this is what I'm looking for in Cake tomorrow morning. I'm not concerned that it's moved overnight. It looks like it's done so on about 1,000 shares, so I don't trust that. But Cake is one to keep an eye on. Here's another one with a longer term chart that looks like it has room to run maybe up towards that 56 level. It's another, more defensive name. I've got a position in Affirm, in Bros, as I mentioned. So anyways, that will conclude this broadcast. It says there's 4,600 people. That's amazing. Thank you, everybody, for valuing my work and tuning in here tonight. I'm going to end it here. So thanks again. And hey, you know what? While I've got you here, I probably ought to tell you about the sale I have at Alpha Trends. I'm going to keep talking about the sale until everyone drops off. There's 4,600 of you. Let's see how quickly people run away when I start talking about a sale. So alphatrends.net, I've been doing this for 15 years, I think. Howard Lindzen at StockTwits, started me basically in the subscription business by saying, hey, Brian, do you want to monetize what you do? And I said, sure. What do you got in mind? And we started I started Alpha Trends under StockTwits, and it's evolved into what is now a swing trade service. I'm not a proponent of day trading at all. Most people suck at day trading. Most people should not attempt day trading because from what I've seen, from doing this full time since 1991 is most people lose their money day trading. It's just a fact. I mean, sure, there's day trades that I take, but that's not my goal. My goal is to get into a stock like Bros, like I did here the other day at $48.55 as the buyers are regaining control right in here. 48, where was it? 48.55, I think, on this day. So I've been holding this stock since whatever date that is, the 19th after the pullback. My goal is to get into a firm and still hold some of that one. I'm long a firm at $58.60. And these are trades that, so right over in here that I narrate for Alpha Trend subscribers. I've got a Discord service. I do an end of day video every single day with the key ETFs. And then after that, I do a video which outlines the new setups for the next day. And I say, here's why Ring looked like a good purchase yesterday and where our stop. And here's another one where the 5-minute stop saved me today. So, and talk about a great looking weekly chart. Look at Ring. If they didn't scare, perfect stage 2 uptrend, stage 3 distribution, stage 4 decline. And look at it. So these circles are, sometimes you see big rallies in stocks, and this was a big rally from 32 to 50, but with a declining 200-day moving average. Go ahead and trade those, but don't expect them to last. The 200-day moving average, they'll still scare you out and then they'll wear you out. And now we've got this long-term stage 1 in Ring that looks very much like SQ, same type of trade. So, Richard was actually what sectors, what, industries. It's not about that. It's chart patterns for me all the time and looking where the money is going and where it has the potential that maybe in the next 2 years, it's going to go back to these levels. I don't think so, but who knows? Maybe that happens. So I talk about the individual stocks and in these videos, and every 2 weeks, I have a live webinar for Alpha Trends members where it's highly educational. And in fact, we'll do questions about individual stocks, but the idea is to ask educational concept questions, like about selling some at R2 and what are pivot points? Where do I anchor my VWAP? Why did we anchor it there on that chart and not here on this chart? And trying to help people become better traders. So if you sign up for this sale that's going on right now, if you add it all up, I think, what does it say? I did a tweet on it today. I should know these things, but I'm looking for my tweet right now. It says, and this is, the 1 year annual membership with the 2 webinars, with the Discord, with the 3 daily videos is typically $12.99. The intro trading course is $99. The advanced trading course, which is 13 hours, is $4.99. A one-on-one with me for 30 minutes is included in that. All of that $2,300 value is just $998. You can find that link on Twitter. So be sure to go there. And the numbers are actually growing the more I talk about this sale, which is amazing. There are 4,859 people here. So thank you. If you really value my work, you'll go take advantage of that. I know there's a lot of different educational services out there. I've been doing this full time since 1991, trading, that is. I've been doing Alpha Trends for the last 15 plus years. I wrote my first book in 2008, Technical Analysis Using Multiple Timeframes. And my second book, Maximum Trading Gains with Anchored VWAP, came out in January of 23. So I am highly about make the trade your own. I'm not there to tell people what to do, but to help guide you, to be a mentor to you, to help you create your own strategy. I love it when I get questions. When I get cancellations from members who say, Brian, I've been with you 2-3 years, and now I'm ready to go do this on my own. That is such a huge success story for me. Those are like my favorite emails to get. And that's why I'm asking for new members here today to replace the ones that I've had, in the past. And you know what? It's not going to be right for everyone. If you're not sure about it, the sale officially ends on Sunday, December 1st. Take a 2-week trial if you want. I will honor that $998 price, but only if you sign up for that 2-week trial before December 1st. I don't want people to be members of Alpha Trends who are going to regret being a member or feel like, hey, I was pressured to sign up because the clock was ticking down or anything like that. I want you to be a member so that we can uh, go through the market together with a strategy, with a discipline. It's not about, hey, I've got a feeling about Bitcoin mining stocks. Well, Bitcoin mining stocks have, they've been garbage. Wolf, Hive, they just aren't doing what they're supposed to do. BBAI is a different one. I was out of that one. IREN, they're not doing what they're supposed to do, but they're commodity stocks. So, here's how to avoid these stocks. Let's talk about the goals that I have at Alpha Trends are: one, to help you make more money, of course. Number two, to educate you so you can learn how to do this yourself and develop your own style. Three, to provide education. Every single day, my videos are packed with education. And four, to provide a positive environment in the Discord. Keep things in the Discord. It's all business. There's no messing around there. It's about making money only. So, anyways, that's what's included. Thanks for sticking around. We've got 4,980, 81, 82 people. Oh, just went to 975. So it doesn't look like we're going to crack 5,000 before this ends. But that's pretty amazing that everyone, thank you for joining me tonight. And again, take a look at alphatrends.net. Make sure you use that link that I put on Twitter earlier today. And if you don't like that, for $10 a month, you can subscribe to the Alpha Trends Twitter subscription. But this is such a good deal. I would encourage you to take a look if you're really serious about education and doing better in 2025 in particular. So thanks for your time this evening. We just cracked 5,001 people. Fantastic. Thank you, all 5,010 people who joined me tonight. And have a good evening. Good night.